Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the 4-hour chart and looking at this impulse to the upside, where we at least expect this high to be taken once more and then a potential 5, after which we then look for a corrective structure to the downside. However, it is quite difficult to know exactly how far a wave 3 is going to extend unless we're eventually going to range long enough for a wave 4, which we almost reach over here, which is the 1-to-1, but more about that in a second. Because for a wave 3, what you want to do is take a trend-based fib from the low to the high to the low over here and toggle on the 1.618, the 2, and then etc. Right now, currently we are ranging below the 2.618, potential target for a 3, but if we pass this 2.618, we're going to be looking for the 3 at 45.2k and then the 3.618 at 46.9k. Before we get that high, however, we do have a golden box for a bit of additional resistance between 45.2k and 46k, and just above the 3.618 we have the blue box here between 47.2k and 47.5k. Now if you then look at the fib times on the chart, these fib times are taken from the high of 1 to the low of 2 to the high of wave 3 to compare the length in time of wave 2 with a potential wave 4. And what we're looking for most commonly in a wave 4 is a wave 4 to take longer in time than a wave 2, meaning we like to see the 1-to-1 pass over here. So if price is going to continue this range, maybe throughout the weekend, the probabilities will slightly increase. We're going to be working on a potential yellow wave 4 instead of a lower degree white wave 4, which I'll show you in a second, right? So therefore, we have to keep in mind that the move that we get to the upside might be a potential yellow 5, and then we get a bigger correction to the downside. Now, the target area for a wave 4 is between the 0.5 and the 236, as you can see. 43k to 40.8k, taken from the low to the current high that we have over here. And if price would do this, this is the invalidation, the 0.618 at 39.9k. When we zoom in to this yellow wave 3, however, there's still the possibility we are very much working on a lower degree 5-wave structure, which is then a 5-wave move, finishing wave 3, and then we're going to be looking for the yellow 4, and then we're going to be looking for a wave 5 to the upside. So we have some more upside to go, and that is this scenario over here. Lower degree Elliott Wave scenario of yellow. In yellow, we have the 1, 2, 3, 4, 5, and then in white we are looking for this 5-wave structure here. So this is the micro impulse, as I call it in my folders, where we are looking for a 1, 2, 3, 4, and then a wave 5, after which we expect another 4 and 5 in yellow. Now in this particular scenario, you can see that price has now passed the 1-to-1, which is taken from the high of 1 to the end of this wave 2 here to the high of this wave 3, where potentially we had the 5-wave move to the upside, finishing 3, working on this white 4. Target area for 4 is between the 236 and the 0.5. 236 over here has been hit, maximum target 41.2k, and the invalidation is the 0.618 at 40.3k. Time-wise, as mentioned, this wave 4 is absolutely valid. It's at the moment longer over here in time than this wave 2, increasing probabilities for this wave 4. And what you don't really like to see is this wave 4 taking too long. The longer this wave 4 is going to take, the higher the probabilities we are in a higher degree yellow wave 4. So over here, what you can see is the dark or light orange line, dark orange, and the red line. It's very rare for a wave 4 to be 5 times longer than wave 2. Now, just for your information, the 3 is on Saturday, 9th of December, 5 p.m. Central European Time. The 4 on Sunday the 10th, 11 p.m. Central European Time, and then Tuesday the 12th, 5 a.m. Central European Time is the red one. So basically, if we are going to range throughout the weekend, we are going to reach the 4 fib time over here, meaning the white 4 is going to be 4 times longer than the white 2 over here, which is not that common. So we do have to keep that in mind because of the probabilities increasing. The longer this goes sideways, the higher the probabilities for a higher degree 4 and the next move up to be potentially the final impulse to the upside in a wave 5, instead of having a white 5, yellow 4, yellow 5, right? Now, if we then zoom in to the local range that we have over here, we go to the 15-minute chart. then the local bearish scenario is that we are going to continue this range. Now the weekend is coming up. Of course, the weekend likes ranges. We are in bullish market structure, so sometimes we do see some volatile weekends. But in this local bearish scenario, we are looking for a three-wave structure where we have a first structure finished in an A or a wave W, then we're looking for an X or B, and then a wave Y or a wave C. Now for a wave B, we have to think about flats, which means that price has to at least go to like 44.4K before we consider a potential A, B, and then a wave C in an impulse, 1, 2, 3, 4, 5. So at the moment, probabilities are then higher for a W, X, Y. Now, when we look inside this wave X and we look for a three-wave structure here, the most common target area for a wave Y or a wave C is the 1 to the 1.236 taken from the low to the high to this low over here. That's where I put it at the moment. Doesn't really matter. There's not much difference between these two. But what you can see, interestingly, is that we haven't hit it yet. So if we are looking here for a three-wave structure to the upside, we did hit the 0.618, which is a target for a wave Y, because the wave Y target area is most commonly 1 to the 1.236, and just common is the 0.618. But the fact that it hasn't been hit yet does increases the probabilities. We might see a little bit more upside before then starting a potential Y over here to the downside if this is going to be the high. Interesting is the double top here in confluence as well, which by the way is at 44.2, 44.3K over here, right? Could grab the high and then move towards the downside in the weekend. So that is something to keep our eyes on. Or if we continue up, we have to consider a B and a wave C. Now the bullish scenario was posted by John in the group, and I think it's a great find. So it is his chart over here. This is what he posted in Discord for a potential WXY, right? Zigzag in W, wave X is complex, and then we're looking for a triangle in a wave Y. Perfectly fine here, where also the volume in this triangle preferably is going to reduce. And if we take a quick look at the volume, you can see on average it has been reducing. Of course, now it goes up because, of course, the triangle is then finished here. Now, this is a potential scenario after which we are then looking for impulsive continuation, right? We're looking for new highs to be made in this particular scenario, and we don't want to continue ranging throughout the whole weekend unless it is impulsive, where we're then looking for a 1 and then eventually a 2, but we want to see continuation. Now, if we look at this range here, then support, by the way, in case price does move to the downside quite deep, then we have the 12-hour order block here, 41.7, 41.9, and we have the volume profile of this range with the point of control, the red line, value area high, value area low, right, in confluence with the 12-hour order block. More locally though, we have been ranging here. This point of control is constantly switching between this level over here, which we hit over here and rejected from, and the one in the middle. And we have the value area low and the value area high. It's always interesting to keep an eye on what is happening over here because, you know, most of the time Bitcoin is ranging. So it's very interesting to keep an eye on these tools like the volume profile and just a normal range tool. We also have the double top at 44.3K as mentioned earlier. If we look at the CVD divergences, then these bullish CVD divergences already played out as price took this high. We have the bigger bullish CVD divergence here, higher low in price, lower low in the CVD. The target is then going to be this high. But as you can see, we have more than enough room still below this low as well and still have bullish CVD divergences. So what I like to look at preferably is local bullish or bearish CVD divergences. We do have a little bit of bullish CVD divergences here where the target would be this high, so that is still potentially in play, which you can see over here. Higher low in price, lower low on the yellow line. That's a bullish CVD divergence where the target would be this high. The invalidation would be for price to take this low over here. And if price moves to the downside, of course, one can check again with bullish CVD divergences with potentially this pivot low over here. Higher low in price, lower low on the CVD. Of course, also, we always have to keep our eyes open for bearish CVD divergences and to observe the reaction at certain levels. I always enjoy to go to the 3-minute time frame, but at the moment on the CVD chart here, there's on the 3-minute not much going on. If we then finally look at the probabilities of the different scenarios, then on the medium time frame, low time frame, we are still looking for continuation to the upside, right? We are at least looking for the yellow wave 5 to the upside and only after the yellow 5 we would then be looking for a move to the downside. It really depends on how long price is going to range here, right? Or is it going to move up relatively soon, maybe throughout the weekend for a 5 and then start a 4. Now this is something that's very, very interesting that we're going to pay close attention to. And on the local time frame, basically this range over here, highest probability for a continuation of the range and potentially a move to the upside, right? Because if we look for the most common target area for C or Y, we haven't hit it yet, right? So that is interesting, that area over here. If price does move to the upside over here and takes potentially the double top, we have to observe the reaction because of course price is quite high and it might just continue. But at the moment I would say the probabilities are a little bit higher to continue the range. And which also means, of course, you know, maybe hit that area and continue the range. If we continue to the upside, absolutely fine, because that is also the higher time frame probabilities. No, in the bullish scenario, we're simply looking then for continuation to the upside, potentially white 5 to finish before the night ends, Central European time, and then look for a continuation of the range throughout the weekend, which then is the beginning of the yellow range. So yeah, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.